Hey guys, it's Fidget here. Today is going to be a little different. I just wanted to go over my specific trading strategy. It's nothing crazy, it's just price action. But I've been getting a lot of questions asking how do I find my levels and how do I determine what a good entry or good exit is. And basically what's my overall strategy for finding levels and then trading them. So first off, we'll just start with support and resistance because those are my main things. I trade off of support and resistance, and I trade off of price action at the top or bottom of our ranges generally. So finding levels is decently easy once you get the hang of it. So looking at a stock like this is AMC. To the right we have Nasdaq. Since AMD is clear here, I'll go over AMD first. So we're gonna want to find, we can see um, I guess right here we want to mark a support, right? So we're going to see on stocks, you're going to want to see things like this if you're marking a support. Bounces. So 1, 2, 3, 4, 5, 6, 7, and then it made a move all the way up towards 30. Um, what's most important is all of these bounces here in that zone. That lets us know that there's buyers stepping in this specific area from 1460, whatever this is. Okay, so 15 all the way down to 13 flat. When I go ahead and mark my level here, and one thing to note is that levels aren't concrete walls. The market uses levels more as a trampoline or a flora that's going to move. So just because I marked 13.8 here, which is what it looks like lines up at, let's see. Yeah, so right, 13.8 right there. So 1, 2, 3, and I picked this exact 13.8 because this is a peak or not the peak, sorry. This spot right here catches both of these little low peaks, and then also has that third touch in the middle. So 1, 2, 3. I want to find generally 2 to 3 points of contact minimum before I think it's the actual level. So now that we have a level like that, it wouldn't be too hard to find a resistance in this zone too. We can obviously see if you had a support marked from this bounce, and this bounce, yeah, you maybe wouldn't have been able to catch this trade here. But in a situation like this, I probably wouldn't have gone ahead and put this as the top of my range, even though it would, just because these keep making lower highs and they don't line up. A lot of the time that makes me think, we might test the actual top of this again. So I'd want to see something a little more even like that. But moving down the line, so this was a support from, let's see, this would have been 4 months ago, 5 months ago, and 6 months ago. And then we move all the way into now. And we're going to see that this level comes into play, right? That support, once got broken down here, now became resistance, right? One rejection came over, end up closing back under that level, another rejection here. So now with this one simple line across my screen, there has been multiple trade points, right? This first tap here, getting close to our resistance, it gave the opportunity to trade this zone multiple times, right? Once, twice, 3, 4, and then potentially 5 times. That's one thing to note. You don't have to have a million lines across your screen. You can make it decently simple. I mean, this is, even if you just marked this double bottom level here, you could have played off of it multiple times. And then once you have specific levels set across your screen, it's not going to be too cluttered to where you're going to be able to see things like this. Mark that real quick. You're going to be able to see things forming like this, right? So we have a support turn resistance lining into the 50 MA. This doesn't mean it's going to go to the downside just because it's under 13.8. But this lets us know that the market is tightening up into this tiny little range. So before, you had a wide range here, and then it popped all the way up. Now we have a very tight range inside of the small zone here, and If it breaks over 13.8, potentially that's something you'd go long on. That's something I've been watching. And then if it, closes back under 12, or I would say 1158, just because in a downtrend with my strategy, I like to see the last higher low get broken before I ever think that it's actually going to come down. But yeah, this thing could be setting up for a symmetrical triangle to play out, or this could end up being some type of bull flag and breaking over 13.8. It could be a rising wedge. It could be a ascending triangle. So multiple things are coming. So at the point when you have a specific level, now that matters is understanding the price action that you're seeing, right? So a big thing about understanding it is, yes, we have a rising wedge or a descending or ascending triangle forming at this 13.8. If you understand what I just said, I said we have a rising wedge bearish pattern forming, and we also have a bullish pattern forming. I'm not picking one side. I'm not being biased. I'm ready for both sides of this trade to play out because we know it can. Look at AMC from that last support. It broke all the way to a new low, and that's when it flipped back up, right? Just because you're having a price level acting a certain way doesn't mean it won't change in the next day or the next week. So it's good to wait for closes, outside of your ranges, which would be, say you counted these tops here. In my opinion, I wouldn't, trade a small trend line like this with only 2 touches. But the 2 ways to trade this would be, finding shorts down here, finding shorts or longs at this here, or finding a long over this level here. So there's only 3 zones you want to pick off of this whole pattern and this one specific price level. So we can go to any name. I'll delete everything here and basically do the same thing. So, put a box. So now we'll do the same thing on AMD. So we had 2 bounces here from back in the day. So we had bounces on our weekly. We can see all of them in this demand zone down here. Now we're at that same level again, right? This doesn't mean we're going to bounce, but it means we have a level to trade off of. How simple is that? I put one line on a screen. You don't need to have some crazy strategy. You do not need to have a million EMAs, RSI on your screen stacked with 50 oscillators to figure out, ranges or finding entries and stuff like that. You want to find key levels like this, block out the noise, and then zoom down to different time frames. So now we can see that we've got, levels near 80. I won't focus on those just because we have this 73.65 level, and this, could potentially play out for next week or next month, but we're going to focus straight on this 73.60 level here. So if we look down some lower time frames, we're going to be able to see the price action here, and you're going to start to kind of see how I go through the stop process, because AMC had a very simple pattern that was, kind of forming and getting ready to play out. AMD doesn't have that yet, but it has broken below this level. It tried to hold back under there. We got bought back up midday. We got to push back below it. The main things you're going to want to be watching for are, since we moved down, you're going to be watching for something like this, or you'd be watching for something like this to try and trade back up into that 50 to see if one of these trends can continue or if the trend can break. There's nothing special here. There's nothing crazy. And you might be thinking, okay, so now you showed me how to find, a support or find a resistance and, see which ways I want to trade off of it. What price action exactly am I looking for? So that would be the next thing down the line. If you could find this level, I'll go back in time and see what we can find off of here. So I guess on the weekly, it's not gonna show me the price action that I really want to show you guys. But a lot of the times I'm just looking for hammers or I'm looking for bullish engulfing candles. So you want to see something that screams, hey, buyers are stepping in, right? So first time we hit this 73 level, bullish engulfing. Second time we hit it, bullish engulfing. Third time we hit it, no bullish engulfing. So we ended up retesting that level because buyers didn't say they were strong enough or show, that they were pushing the sellers completely out. Fourth time, bullish engulfing. Fifth time, failed to have a bullish engulfing, but still pushed its way back up. Rejected here and then had a continuation candle. Pushed, I believe that may have been almost to new highs. Yeah, so almost to all-time highs. Around, I believe that was around this time here, near 94, 95. Came back down and had another bullish engulfing before a move up. If you notice, almost every single one of these bullish engulfings near support or near some type of trend leads to a push in that direction, right? Because buyers are strong, they're stepping in and telling us that. So here, another bullish engulfing. It has wicks, so I generally wouldn't trade something like that, but I'm just trying to show you. What do we have here? Bearish star. Bearish engulfing here. Bullish engulfing, and then it moved to the downside. So we're going to want to look for specific signals like that, but mainly at the price levels you find. So now we don't have anything here, right? We have a weekly bearish engulfing, which is always terrible to see, but that doesn't mean we won't get some type of bullish hammer or bullish engulfing next week, and that's the things you want to watch for. Like on NASDAQ here, since people trade most of these tech names, you'll see a bullish engulfing on this 4-hour. Now on that daily, we still didn't get a bullish engulfing, so that's what we're kind of watching for. But most of the time, those are the signals that I'm looking for to trade off of specific zones. You're not going to want to just enter when it hits that price level. Like say I see, I'm like, this is a 73.65, looks like a decent support. The second it gets there, I'm going to go long. Well, that's the wrong answer, because if it closes under here with this bearish engulfing and then retest 73.65 and you go long, you're going to miss the whole short trade that could trend down. So you want to trade in these specific zones here, either way, up or down, depending on the next candle that's printed at your specific price levels. So I can go ahead and do the same thing on Apple, just to give you guys another example. What's a good level here? I guess 136. We'll move down to a shorter time frame just to see something more relevant. Let's see. So I'm not sure if I'm seeing any price levels that I would care to trade on Apple at the moment. Let's see here. So I guess there's not really any zones on Apple I'd like to trade, so something like this I would probably just skip. Reason being is because it has a bearish star sitting right above it at 150, and then it keeps having these weird gaps, but it doesn't have any solid price levels that I'd want to trade off that have 1, 2, 3, 4, or whatever bounces. So we'll take a look at something like Meta. This probably looks the same. Yeah, it's going to look the same here. So I guess there's no setups here, but we can look down on the lower time frames, and now I will show you how I actually will trade intraday. So I showed you how to find the levels and how you would mark them, and how you'd potentially trade over or under them depending on the larger time frames, like the 4-hour to 1-hour to the daily candles that you want to see off those levels. If something like one of those candles closes, then you're going to want to zoom in to the intraday movement here. So a lot of the time I'm going to go, well, not a lot of the time, every time I'm going to come ahead and I'm going to mark the pre-market high and the pre-market low. So that's going to be these blue levels here. The reason this matters is because when the market opens, I want to see how it reacts compared to that overnight range. So this would be the overnight range high, closer to 162. The overnight range low would be closer to 160 flat or 159.60. So when the market opens, I'm wanting to see, are we going to stay in a range, or are we going to break range to the upside or to the downside? And you might be thinking, well, why couldn't you just open up any stock and put a level on the bottom or on the top, and then you don't need to do any of this other levels that I was showing you on the larger time frames, the answer to that would be doing the other steps in the process makes you understand a lot more of the price action and what could potentially be coming and what you should be setting up for. So if I see four bearish engulfings on the daily and then a bearish engulfing that breaks me down below a specific key level, which say that key level was 161, 162 or was 159.60, I'm not going to be like, oh, I had all those bearish signals and a bearish close under. Um, you know, now I just want to go long on this stock. No, from understanding and seeing the larger time frames and seeing that process, kind of a little bit more of the process that the sellers or buyers have been going through, and what to potentially look for. So you wouldn't be looking for a long under that support that now became resistance. You'd be looking for a potential short. So one thing to note here would be, Facebook broke that to Meta or Facebook broke that to the downside. When it came back to retest that level here, it didn't make it all the way, but when it came towards its VWAP or, its high of the day area, it ended up having a bearish engulfing. Those are the signals I'm looking for. So a breakdown, retest near our level, and a bearish engulfing. That right there would signify an entry for a move to the downside. You'd simply have your entry here. So when that candle closed, you'd have a stop loss on a close above this level here, and potentially have a take profit on some levels to the downside. Now this one, of course, didn't have any levels for us marked to the downside, but this is an example of how I would look to trade it. I guess AMD may be a better example, just because I believe I traded this name. Yes, I did trade this name. So I traded this name on this specific date here, and I'll show you exactly how I traded it, just so you know I'm not showing good entries and then not taking them. This is exactly how I trade. So I woke up, I marked my levels here. I saw, let's go down to the lower time frame on NASDAQ. So I saw this 1 hour bearish engulfing on NASDAQ. It closed right about 8. Right about here, 7:10, we saw the market trying to move back down, and I saw us rejecting near the top. I'll pull up ES, I guess that makes it better. So I saw ES and NQ rejecting near this 11,000, I would say 11,806 level, which happened to be one of my levels. Maybe 8,000 or 3,807 was closer to one of my levels, but that's what I was watching for, a rejection. So that's clearly next to this top here. So that's the zone I was watching. Immediately, SPY rejected there, and AMD was already below its pre-market low. So we had, our support broken, and our range was broken to the downside. At that point, I'm expecting either the market to continue flushing down or a retest of this level to where I can find an entry. Once we got this move back up, I started looking for a short. So we got that move back up, and then we had that instant rejection on ES, which would have been, right up in here. So we had that rejection on the 15. Right when I saw that, I went ahead and took an entry on the AMD puts when I saw this bearish engulfing here. So I saw my bearish engulfing, it closed, I took my entry here with a stop on a close above this zone here. And then we got our move down, and I believe right around here, I took profits for most of my position at, I believe, 80 or 90%. And that's how I would find my trades here. So I have my overall strong levels. I go ahead and zoom in and get, I have my overall strong levels, and I understand the price action on the longer time frames. Then I go ahead and look to the shorter time frames to find my overnight or previous, day range. And then I want to see it be broken or be held up, because say this was going to be a bullish day, maybe the market could have opened, gave some type of bullish signal here, like a bullish engulfing or a hammer off of this pre-market low. That's something I'd potentially go long on. Maybe we can find a day where the market was green. So maybe we'll find an example here from the previous day. We'll mark that pre-market low, mark that pre-market high here. So that's all you have to do is mark those two levels. Of course, when range gets broken, you're going to want to have levels elsewhere because, say, let's delete these two. Say range does break here, so you buy a call here. Of course, you're going to want to target something before or close to your pre-market high. But say it breaks over pre-market high and then I take a long, I'm going to need to have levels elsewhere, maybe like a different pre-market level, to have some potential next level of resistance or a profit target. So see if there's an example here. So I guess, yeah, this one gave a few decent entries or examples of what you want to be looking for. So this name here, in the morning, pushed back up towards that pre-market high, rejected, came back to pre-market lows where it had a bullish hammer, and that bullish hammer quickly got engulfed by the sellers. Right after that, it gave a really bearish candle that says, hey, we're looking like we're going down. But I believe at that time, I think NASDAQ may have been doing something else. Yeah, so NASDAQ had closed some type of less bearish hammer compared to AMD, which flipped the market. But once NASDAQ started to make its move, you can see that AMD closed a bullish engulfing at its pre-market lows, closing back above. When you see something like that, you would go ahead, you take your entry here with a stop on a close either below this range or below this low of the day, where that actual where the buyers actually stepped in, where the sellers died off. So you enter here, stop loss here, profit target being, I would say, high of day here. Not high of day, pre-market highs or close to them, 30, 40 cents before. We can see that entry gave a move all the way towards that side, but the market stayed inside of this range. So if range is broken to the downside, a lot of the time you would trade it down, but this one got bought back up and maintained its overnight range, so you'd be able to trade it from bottom to top. I'm looking for an example where range was broken and it moved. Let's see. Guess it would be better to find one more towards the upside. We'll see if Apple has any. I know it had some relative strength on Friday. So yeah, this should be a decent example here. So we've got Apple. We're going to go ahead and find our pre-market highs and pre-market lows, right? That's all we need to see so far. You can just assume that we know what the 4-hour and the daily looks like. And then we'll go here, mark our levels. So this is just another example. So we'd see this here. So pre-market highs got broken right here. It tried to push back up, probably into a different day's level. Yeah, so once it broke out of range, you would need to know levels from different days, right? So I'd want to know the peak of one of these days, or where it rejected and had that double top. So it broke out of this range, pushed up to yesterday's highs, and rejected. At that rejection point, you're either watching for two things. You're watching for a flag or some type of formation to start here, or you're watching for that rejection back down to this level. So you see that bearish engulfing closed under that 137 pre-market high after rejecting where it double topped yesterday. So you'd potentially be able to trade thinking it's a triple top. You'd take your entry here with a stop loss on a close above 137.14, and you'd target probably pre-market lows or low of days. You can see it quickly moved down but got reversed on. It maybe gave another signal here and then here to the downside, which ended up failing because this thing moved back to the upside. But I wanted to show you that not every trade's going to line up perfectly, right? So you had a bearish engulfing and a triple top closing under pre-market lows. This entry could have got you a move to the downside, but if you didn't have, a close take profit, and then you would have lost something. But if you were patient and waited, you'd be able to see that once it broke back up over pre-market high, you may have been able to find some type of entry here. Maybe we'll look at a different time frame. So yeah, later in the day, it had this. So bearish engulfing, barely moved down, but it made a new low on the day. So that would have, followed through like price action would say. Sellers stepped in, they did step in, they made a new low. But buyers held it up over pre-market lows. And they wanted to maintain, maybe trying to hold out of this range. So then we see it keep making higher lows. So you're reading the price action in that range. On that third bounce here, you get a bullish engulfing, and that gives you a signal. You could go long here and look to target pre-market highs or above pre-market highs or that recent high, or you'd be waiting for it to reject here to try and catch a trade like this. You always want to plan for both setups. In this situation, it ended up breaking to the upside, so this would have been your entry signal here, or this would have been your entry signal here. One of these candles closing, so bullish engulfing, candle closing over 137.14, which is your pre-market high, or the retest and then the bullish engulfing closing over the bodies from earlier. So 3 different entries there, potential entries. You trade all 3 of those different, but this one here, it's a lot riskier entry. This one has most confirmation, and then this one has full confirmation, a retest, and then a close back, a bullish engulfing back over, which led to that push out of the range into a new high intraday. So it's decently simple strategy. Looking for hammers, looking for bullish engulfings, looking for patterns forming in between your levels, right? If you looked at this midday, you easily would have been able to see a bear flag or a ascending triangle forming here. Not too hard to see, but if you didn't have these levels, you wouldn't know where to find an entry or where to find potential exit points. So I think those are really key to have. And if anyone has any questions about anything I went over, or if I didn't go over anything as in depth you wanted, just please let me know and I will go over that. Some things I went through a little quick today. It's just because I'm trying to do this on the fly. For me, I want to show you guys exactly how I do it instead of having something staged and showing some stock that has, price action that you don't see every day. I want to open this, show you exactly what I go through. So when I wake up, I look at SPY, I go ahead and look at the longer time frames like I showed you before to find key levels, and then I just mark my pre-market low, pre-market high, and trade from there. So that's basically it. If you guys have any questions, like I said, please let me know. I plan on going over more of this and maybe showing more in-depth videos of me live trading. I do trade live every day in voice chat. Sometimes I'm streaming, sometimes I'm not, but no matter what, I'm in there and I'm almost always saying my entries or exits and what I'm looking at and why I'm looking at it. I'm always giving reasoning. So if you guys enjoyed this, please let me know. If you have positive or negative feedback, also let me know. I hope you guys could learn something here.